Okay, what's going on, guys? Today we're going to be talking about how I am structuring my portfolio going into 2025 and a couple of the changes that I've been making, as well as what my new strategy is. So, if we take a look here at my portfolio for pretty much this whole year, most of my money has been sitting in cash, and that's because I've just been getting paid that 5% interest, and it's been pretty good because I don't have to worry about a lot of volatility. But now that interest rates are coming down, we're down to 4.5%. It's been my account's been earning 5% the whole year. Now that we're coming down to 4.5%, and the Fed is talking about bringing it down more and more over the next couple months, I've already started changing the structure of my portfolio, and I would say the big move happened in the first or second week of August. So about I would say about a month and a half ago, when we had that dip in the market, that's when I bought. As you can see here, I made a big position in the QQQ, which is the NASDAQ index fund. And pretty much I had started selling a couple of my stocks. I forgot exactly which ones, but I started selling some stocks back then. So I was sitting on a good amount of cash, and I figured I want to start just investing in mostly index funds, and then having maybe like 80% in an index fund. Let's say something like 70 to 80% in an index fund, maybe 10% in cash, and then like 10%, 15% in picking stocks. So because I still believe when there's a really good opportunity out there, like when Meta or when Tesla dropped 50% a year ago or 2 years ago, in situations like that, I want to have money on the sidelines ready to pick up shares of those. But for the most part, I would like to have most of my money sitting in the index fund because, number one, it normally has great returns. This year it's up 36%. That's hard enough to do if you're just picking stocks. And then you also don't have to worry about trying to time the market and trying to buy the stock when it's at the right time and all that stuff. So although I have some big winners with stock picking, I have a couple of losers in there where I have to wait, sometimes over a year for me to break even. Sometimes I don't, sometimes I just pick losers and they don't ever go back up and I have to sell for a loss, right? Luckily, I haven't had, luckily I have more winners than losers, so it's not horrible. But still, with the index fund, it kind of takes out that stress, and you just have to, you pretty much just, I don't have to, if I make a big position in the index fund, I don't have to worry about it dropping 50% or me waiting 2 years to get my money back. That stuff like that can happen, but it's very rare because, okay, so for 2022 was pretty much our year where that happened. Okay, for a long period of time, what was it? About a year, the stock market kept going down, and we went from the NASDAQ went from $400 down to 260. Okay, so that's a pretty significant amount. But when I look at the statistics and the research, those bear markets that last that long and drop that much, those only happen about every 7 years or 8 years. Okay, so we don't have to worry about that happening most likely for another 4 years or so. That's at least my opinion on this. Okay, now when I saw the market drop, so here we go. This was what, first week of August, when the market came all the way down here, it dropped about 15% from the highs. I knew that was a great opportunity to get in, and I knew that was going to be extremely close to the bottom. And of course, that pretty much was the bottom. The day that I made a video about this, that was the bottom. And then from there, we pretty much have been going up. So that's the way I look at this. I still do own other stocks like Tesla, like Meta, like Amazon. I made a position in Microsoft on that first week of August too. And then I have some losers like Lululemon, UPS. Those have been big losers for me this whole year. And so those are examples of ones that I'm just looking to get rid of once they go back up. Then we had like Starbucks. I made a little bit of money on. I sold out of that whole position. Nike, I'm up like 10%. I'm still holding onto that just because I believe it should go to about $100 a share. Then I'll be comfortable selling that. But I just think it's better to be in an index fund for the time being because it doesn't take up as much time as picking stocks, and it's also a lot less stressful. And as long as you get big if you get big returns like this, 36% in a year, that's incredibly hard to do by picking stocks. So it makes a lot of sense to just be in an index fund, especially after a giant stock crash. Because when we have a big crash like this that only comes every 8 years, this is how I said it's probably not going to happen for another 4 years or so. So this should just be up and away for the next couple of years. And, you know, every year or two, we should get maybe a 10%, 15% drop, something like that. And when those situations happen, that's when you buy up a bunch of shares, and that's how you make money. So that is my philosophy for investing going into 2025.